Welcome to another chat breakdown. I'm doing this chat breakdown because I know you guys are struggling with technical analysis and you are actually facing a lot of drawdowns on the back end of your trading history. So you guys should focus from the start right up to the end. For the sake of this video, I will start from the weekly time frame in order to go in as deep as possible so you guys can understand. Okay, looking at the weekly time frame on the left hand side, we got this range low and we got this range high, right? Based on range trading, if price takes one end of the range, then we expect price to go to the opposite end of the range. Although based on this, price took the range lows, then our job is to expect price to go towards the range high. Based on this is my long-term drawn liquidity, that is 1.20850 based on this weekly trading range. Okay, the market took that low with a bearish down close candle and expanded higher above that candle. When I'm talking of down close candle, I'm talking about a specific candle, right? It made an expansion profile above that candle. Okay, when you have an expansion profile above a candle, then you should expect a range profile or a retracement profile. Based on this, we could see that we got a deep retracement, right? And marking up our key levels, we got this weekly order block. CRT always goes with what order blocks. You can't call yourself a CRT trader if it doesn't analyze other blocks. You should be able to identify one if you call yourself a CRT trader. This bearish move here started from this bearish weekly fair value gap. So after tapping to this weekly fair value gap, that's that reaction that caused this bearish move, and that fair value gap is going to be acting as our key level. So based on key levels, we can trade from the key level and we can trade the journey from the key level. Okay, last week candle closed bearish. Today you can see um we are on this current week. So now I'm done with my weekly breakdown. Now I'm going to go to the daily time frame in order to refine my weekly levels and probably be in the same agreement, right? Like being the same agreement with the daily, right? The daily has to agree with the weekly for the daily time frame analysis. So you guys should focus. Look at what I'm going to be doing on this daily time frame. It's going to be very, very important. Okay, we got this weekly order block, right? What I'm going to do, right, I'm going to refine that weekly order block. You can see this daily order block here, price currently at, and I can you can clearly see, and that's the refinement. So I'm gonna delete the bigger one. Okay, right now we got this internal structures on this range, right? You guys can see price was going up, giving a bullish trend. It went down, giving a bearish trend. Then later on, broke above this swing high and made a market structure shift. So that market structure shift is gonna be a reason why I'm probably gonna be looking for buys, right? Okay, let me make sure I level things clearly for you guys. We got the market structure shift, And you can also understand that, you can also see that price took this range low, and price also took this range high, and then price made an expansion swing to the upside. So we got a bullish dealing range. That is, when we have a bullish dealing range, we divide our charts into two regions. That is the premium region and the discount region, right? Okay. For the bullish dealing range, you guys should write this down. We have a high probability opportunity at discount when the market manages to tap into the key level, which is at discount region. So the one at the premium region has a low chance of expanding when we have a bullish dealing range. So you guys can see in this, like, this internal bearish structure, you guys can see prices making lower lows, lower highs, making breaks of structure within the range. So nevertheless, we should actually remember that we are on a bullish trend based on this based on this bullish dealing range. So no matter what we are doing within the range, we shouldn't forget that we are in the bullish dealing range, and the bullish dealing range, we expect the market to give us a good reaction when market reaches our discount region, and also when market reaches a key level which is at our discount region. So very important. Okay, with that said, now this is the daily time frame, and our job is to monitor the candles within this daily time frame. Okay, right now, on the daily time frame, I got this daily FVG, or we can say daily fair value gap, and we got this bullish candle, right? So now our job is to combine our candle range with our key level before we could probably determine a trade for the upcoming day. So we got this bearish candle, that this bullish candle, right, and this bullish candle that sweep the bullish candle high and tap into this daily FVG. So this daily FVG is going to act as our key level. So our job will be to wait for this daily candle to close. So if you are familiar with trading, you should know the importance of time. So you wait for the candle to close. You can then apply the open high low close, and you can up, and then you can then combine the open high low and time, that is 159. Position yourself on a 4-hour time frame, and then you trade. So this bullish candle is going to act as our candle range high, our candle range, that is, this line is our candle range high, and this line is our, let me just use my parallel channel. So this high is going to act as our candle range high, and we got this our candle range low. So you guys should stay active, right? Be very vigilant. So look at what price is doing within this FVG. So it's going to give us a possible sell, so be very careful. So I'm expecting a possible sell. Once this candle is closed, we look for a 4-hour candle which can actually give us a valid 4-hour CRT. Then we use that 4-hour our 4-hour narrative in order to position ourselves and look for a model number one on the 15-minute time frame. So that is it. This is the end of the video. So you guys should just apply the concept, as you guys can see, and you guys are going to be able to cash one good trade on this time frame. This daily time frame. So this range low is my 50% is my short-term draw on liquidity, and opposing end of the range is my short-term draw on liquidity. So we will see what the market will do here. Once the market reaches this range low, we will see if you should be looking for buys or sell. So we should just be be following the charts based on what we are seeing. So we also got this daily dealing range as well. So go this daily dealing range, and the market is at discount, so we should expect we should move our stops to break even. If we got a opportunity here to sell, we move our stops to break even once we reach 50% before targeting the opposing end of the range, because you can never tell, the market might push higher since we are at discount region. So this is the end of the video, guys. If you have been able to watch the video to this extent, consider to subscribe and also like, comment, and also share the video to your trading communities for others to learn. So that's all for the video. Peace out, guys.